Bitcoin has been called digital gold, but does it actually work as a store of value? Let's break it down. So Bitcoin has been one of the best performing assets in history, with an annualized return of 230% over the past decade. However, it's also been highly volatile, experiencing multiple 50% plus crashes in some short periods. A store of value is something that, one, retains purchasing power over time, and two, can be exchanged for other valuable assets. Traditional stores of value include fiat currency, gold, and real estate, each with its own strengths and weaknesses. Now, fiat currency, such as US dollar and the euro, is liquid and easy to use, but inflation reduces its value over time. Gold, on the other hand, is scarce and holds long-term value, but is difficult to transport and not practical to use for transactions. Then real estate appreciates over time, but it's very illiquid and expensive to buy or sell. Now, Bitcoin is scarce, globally accessible, and highly liquid, but its volatility raises questions about its role as a store of value. Now, Bitcoin's biggest strength? It's scarcity. Unlike fiat, which governments can print endlessly, Bitcoin is hard-coded to have only 21 million coins. In fact, some of those coins are already lost forever, making it even more scarce than that. Critics say Bitcoin isn't stable enough to be a store of value. Traditional stores of value, like gold, don't experience the same extreme price swings. Plus, Bitcoin is still relatively new compared to gold, which has been used for thousands of years. Now, another argument of theirs: anyone can copy Bitcoin's code and create a new cryptocurrency. However, Bitcoin's network effect and security make it uniquely valued compared to many of its alternatives. But Bitcoin has some unique advantages over traditional stores of value. Firstly, it's borderless and digital. So unlike gold or real estate, Bitcoin is easy to store and transfer worldwide. Next, there is no third-party control. Unlike fiat, no government can seize or devalue Bitcoin. Then there's its increasing adoption. More institutions, more corporations, and even governments are holding Bitcoin as a hedge against inflation. Compared to fiat, gold, and real estate, Bitcoin is more liquid than real estate, easier to store and transport than gold, more scarce and decentralized, unlike fiat. So whether Bitcoin becomes a long-term store of value depends on adoption. So right now, more individuals and businesses are choosing to hold Bitcoin, betting that its value will grow over time. Is Bitcoin a store of value? I guess it depends on your time frame. In the short term, very volatile, but in the long term, its scarcity, security, and growing adoption make it an increasingly attractive option. So do you want to use Bitcoin as a store of value? Learn more at Bitcoin.com, download the Bitcoin.com wallet, and start holding Bitcoin today.